Good evening and happy Friday. This is Shayna from the Trade Exchange, and we've had a lot going on this week, especially with our international communities. We started off the week with the threats from North Korea that they were going to attack Guam, and as we know, it didn't pan out. Then we had rumors that President Trump's chief economic advisor, Gary Cohn, was going to step down, and that didn't play out, but it did affect the markets. We also had the riots in Charlottesville and the protests that ended in a tragedy, following with President Trump's comments which definitely received some backlash. So we've definitely had a lot going on. We finished off the week with a terrible news of the attack in Barcelona, the terrorism attacks that we saw the markets fall following the release of that. And then today we heard about Stephen Bannon has left the White House, who was the White House strategist. So a lot has gone on this week, but to start it off, let's just take a look at some of the big earnings that we saw. So two retail companies, they didn't do so good on their earnings, and one of them, they dropped by about 25% just today. Who am I talking about? Well, next time you go buy your shoes, take a look at Foot Locker, because Foot Locker is down over 25%. They missed on earnings and they missed on revenue by a large margin. So the revenue expectation was at 90 cents. They only came in at 62 cents. Revenue expectations was 1.8 billion. They only came in at 1.701 billion. So they missed by a large margin. Now, CEO Richard Johnson comes out and he says that, well, some of the sales of the recent top styles, they fell very short of expectations. On top of that, we're really limited by a lack of innovation and availability in the market that we're in. And he thinks that this is going to persist in this market throughout 2017. And these dynamics persist. They expect comparable sales are going to be down about 3 to 4%. So a bit of a gloomy outlook for Foot Locker and a pretty gloomy earnings release on top of that. So again, Foot Locker was down over 25% today. Closing out, you see there at 34.37. Now take a look at this other company, another retail company. Huge drop. This is Coach. So Coach, they're having this attempt. They want to become a multi-brand company. You might remember back in 2015, they acquired Stuart Weitzman. Well, last month they acquired Kate Spade, the handbags things. They wanted to get into millennials and the high-spending millennials and try and go after that market. But they've also been battling the whole problem of, do they pull all their products off of these department store shelves? Do they get them off so they can maintain that premium brand? Because you recall, Michael Kors had the same issue as well. So Coach has gone ahead and done that, and they're trying to pull their brands off. No longer can you use that 20% off Macy's discount to buy a Coach bag. They want you to go directly to the stores. So they bought Kate Spade last month for $2.4 billion, and they said they want to do the same with Kate Spade. They want to pull out a department store. So they do expect to see their revenue go up with the Kate Spade brand alone by about 30%. Kate Spade brings in about $1.2 billion annual revenue. However, this integration and trying to pull them off these promotional channels is going to impact their revenue, and it is going to impact their bottom profit line. So Coach, they did beat on their earnings, but they missed on revenue, and some of these were the factors that came into play. So their earnings expectation was 49 cents. They beat it by just a penny, at 50 cents, but they missed on their revenue. Revenue expectations were 1.33 billion. They only came in at 1.13 billion. So you do see this huge drop on Coach, but it looks like they have a positive forecast. We see demand in China's gone up 9%, their international markets, and that counts for 39% of their business. That's pretty big. But it's going to be interesting to see how this integration goes as Coach is struggling and trying to get a grip on becoming a multi-brand company. Moving right along, let's take a look at the U.S. Treasuries this week, because our U.S. 10-year yield took a hit this week. And again, like I mentioned at the beginning of this, we had a lot going on with our international communities and with the terrorism attacks. And so it makes sense that many traders wanted to move into a safer vehicle, such as these Treasuries, as you see here. And in effect, the 10-year yield. 10-year yield we saw as when President Trump and the announcement that the business advisory panels had been disbanded, we saw the 10-year yield get hit there. Also, the news with Charlottesville and Trump's comments came out, and there was fears that because of his comments, will there be backlash? Is he going to have a problem getting through his pro-business agenda if there is a backlash? And so again, we saw the 10-year yield get hit. And then, of course, yesterday's tragic news. Of course, we see more people moving into this safer vehicle, the 10-year yield closing out the week at 2.197. Last but not least, let's take a look at crude oil. So crude oil, it's actually up for the week. It's up spot 0.08%. So we had great data release. The EIA came back. It's much bigger declines than they expected in EIA data. And we had our Baker Qs. And it's great to see that the U.S. is down a little bit because the U.S. oil rig count is down 5. So it came out at 763 today. And the U.S. total rig count is down 3 at 946. This is great to see because there's this ongoing concern if OPEC can control this glut of oil supply, and it's not helping that the U.S. keeps this output, keeps increasing their output. So it's great to see these Baker Hughes numbers today, but we are dealing with the fact that there does seem to be less of a demand from China. So of course, all these factors are always at play with crude oil, but it is up just slightly for the week at spot 0.08% up for the week, closing out the week at 48.70. Last but not least, let's just take a look at the indices, see how the markets did with such a volatile week. So the Dow Jones were down spot 0.84% for the week. We closed out 21,674. S&Ps are down spot 6.5% for the week. They closed out 24.26. The NASI is down spot 6.4% for the week. It closed out 62.16. And you can see the VIX closed out again above that 14 point level. It closed out 26. And gold, last but not least, gold is actually down, which isn't typical with such a volatile week. Usually we do see people rush in these commodities, but gold is down for the week. It's down spot 3.1% for the week, closing out at 12.91, spot 80. I want to thank you all for joining me this Friday evening. I hope you have a wonderful weekend, and I look forward to joining you next week. Bye-bye now.